Welcome to your Mortgage Insider Update for October the 10th. We were dark yesterday with the Columbus Day holiday, but a lot of action, very unfortunate action in the Middle East over the weekend has brought to head another war in the Middle East between Israel and Palestine, with Hezbollah attacking the Israeli cities along the Gaza Strip. So with the markets closed on Monday, huge reaction today. Bond markets are rallying, meaning interest rates are coming back down after hitting a high that we're going to check out right now on the 10-year. We start today with the 10-year Treasury down 13 basis points, 4.6695%. We actually looked at this last week, and basically we broke free from the limits that we had seen previously back at the end of September and broke all the way up to Friday last week at 4.875% before retreating before the end of the day, and then today we've seen this big fallback. So what I want to check out is the long term. What does this mean in the 10-year Treasury? For that, we're going to go to the Fed charts that allow us a little bit farther view back in time to the 10-year. So back in August of 2007, 4.71% on August the 3rd, 2007 would represent just a hair above where we are today. And we hit all the way up to 4.85 at the end of last week. So that takes us back to the summer of 2007 as far as the 10-year interest rates. Now let's check out the mortgage-backed security market, as the mortgage-backed securities work in the reverse of the actual interest rate, such as the 10-year gave us the interest rate. This gives us the price, and today the price is rallying 46 basis points. That means that things are improving after the price fell, meaning the investors would require the highest interest rate on October the 6th. That did recover on Friday. It's come back today, and we're not anywhere near a positive. Interest rates, still in the 7% range, upper 7%. Did hit just over 8% when these prices were hitting the line last week. So all we can hope for now is an improvement in price, which unfortunately is going to come at the detriment of the world's safety as potential major war starts to break out in Israel, on top of what's already been very challenging in the Ukraine over the last few years. So we're going to keep an eye on that and see if that doesn't turn interest rates. The thought process there is that the investment community would flood safe securities or safe investments such as the 10-year Treasury. Could be a safe way to protect your money, especially in a time period of unknown over that, say, 10-year cycle, 5-year time period. So what hasn't happened recently is there hasn't been a lot of investment in the 10-year Treasury or any of the Treasuries. There's been alternative investments and even reducing the price. So basically banks that had owned these large investments in 10-year Treasuries that, say, when they were back at like 2%, those have lost value. So that's been the challenge with banks such as Silicon Valley Bank back at the early part of the year. So a lot of pressure was being talked, especially in the banking community, over these higher interest rates over the last week. So a little bit of relief could ease some of that economic pressure, but unfortunately it's going to come at a larger cost in the world. Have a great week, and we'll come back to you next time.